For the port operators like Adani Ports and SEZ, problems have multiplied both because of the domestic lockdown and also uncertainties about the EXIM trade in the light of the coronavirus pandemic. In our Ideas for Profit today, I will discuss what is the approach that investors need to have post its Q4 earnings. Now, during the March quarter, the company reported close to 5% decline in the consolidated revenues. Now, this is because the company did see the impact of COVID-19 disruption only for a few days in the month of March. Now, this would only get multiplied in the coming quarters going on from here in the light of the lockdown, the lack of transportation, and also the absence of any industrial activity. Moreover, because of the very high operating leverage in the business, the company's profitability also could get impacted because of the lower volumes. Now, the management also remained quite cautious. They also did not offer any guidance as it lacks quite a lot of clarity right now. Also, the company on its part is taking adequate measures to contain the capex, optimize employees, cut down costs, leverage exiting assets, also renegotiate fixed agreements, and more importantly, also to conserve cash. While these efforts would definitely ensure that the damage could be partially controlled and that the stability could be provided to its business, investors should be really cautious considering that this could really take a little longer than expected. Now, the stock has already fallen by 29% from its 52-week high levels of 430 rupees. We are expecting a decline in the profitability in the fiscal year of 2021 and a normal situation in 2022, where earnings or EPS of about 18 to 90 rupees per share could actually come back to normal as seen in the periods of fiscal year 2019. Considering that the stock is still valued at 15 times its FY22 earnings, which is costly, particularly in the light of the legacy issues such as high debt, pledged shares, high exposure to forex, leveraged acquisitions, and intergroup funding. Moreover, there is also lack of information right now. The company usually shares additional information about, say, businesses or maybe segments in each quarter. However, this time around, even in the second day of its Q4 results, there is no information like that available. In Q4, the company reported a 5% year-on-year decline in the revenues. The consolidated EBITDA fell by 15% on a year-on-year basis. Now, because of the forex losses and also the spike in other expenditure, the company's profits in Q4 dropped by 72% on a year-on-year basis. The full impact of the ongoing lockdown and a possible drag on financials will only be visible in the coming quarters. The company is operating through 71 subsidiaries and 6 joint ventures whose performance will definitely matter in the times of stress. Therefore, investors must tread with caution at this point in time on this one and also wait for more correction from here.